Hi everyone. Today let's do a quick preview of the CPI and Fed meeting tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the FOMC and CPI come out tomorrow. We're definitely concerned about CPI. It's supposed to see a 0.1 increase from April, which would be an aggregate rise of 3.4% for the year. Core is supposed to be 0.3 and an annual gain of 3.5, which is also a step down from the previous read. If we get those numbers, I think that'll be quite bullish, should ease the woes of the Fed and give them some room to potentially cut rates. But right now, we don't know if that's going to happen. They mention here the inflation risk. We're still trying to get to that 2% goal. Doesn't mean we have to get all the way there before we start to see cuts, but it is going to be interesting to see what the Fed says. The dot plot will come out. We'll see if we're going to get any cuts this year at all. I still think we're going to get one, maybe two this year, but the market seems to be unsure about where the Fed stands right now. Initially, it was 3. Now we're down to 1 or 2. And if we get anything more hawkish than that, I think the markets are going to be quite bearish. Moving over to fear and greed, we finished at a 46. 47 was yesterday. You can see this continues to tick a little bit higher. It seems like we might be holding a slightly higher low on this indicator. We're back into extreme greed on momentum while still seeing extreme fear on strength and breadth, so definitely mixed on the markets. You have to trade the price action you have, which is still technically bullish, but we see the VIX ticking up slightly. But at the same time, we are seeing markets hit all-time highs, and then bond shifted quite a lot here. Fear for safe haven demand, but neutral on junk bond demand, and you can see these have really been flat since the beginning of December. Moving over to seasonality, you can see we have peaked theoretically for the month based on seasonality. We're supposed to be in a little bit of a down move. Obviously, that's going to be based on CPI and the Fed tomorrow. I think we could see a bit of a pullback, but honestly, the inflation data last month was a little bit bullish, so maybe we see a more neutral Fed than the one we saw last time. And then you can see the rest of the month relatively neutral, ending up slightly positive, about 0.5 to 1% on the month. Moving over to the economic calendar, you can see 10-year yield came in at 4.43, just a little bit lower than the previous number at 4.8. And then looking at tomorrow, obviously CPI here at 8:30, that's going to be interesting. And then that's going to feed into the FOMC as well as the inflation interest rate projections for the next 1 to 3 years. FOMC conference starts at 4:30. Interest rate decision is going to be flat. They're not going to move interest rates this meeting, in my opinion. And it seems to be right around that 92% chance that we're going to get a pause. And then rolling into Thursday here, we have PPI as well as the 30-year note auction, initial jobless claims, and then Fed balance sheet. Moving over to max pain, you can see it's still sitting at 528. Upper call strike here, 535. So we're above that now. We'll see if we can hold that level. Top of the puts, 538, 539. I think we might wick that upper level and then start to see a little bit of a fall. Put call ratio is still very high, so we talked about that continuing to be bullish into the end of the week, but that's a really high call strike. It's not impossible to close above it, but the probabilities are a little bit low. Moving over to the charts, starting off with the S&Ps, you can see we did get a 3-bar rally here into the close, looked very strong, closed right at the high from that Friday session. You can see here on the daily chart, right at the high, right at that level. It's a new high close, but if it can break this level here tomorrow, we're probably pushing up to that next trend around the 544 area. Momentum stepped to bullish. RSI looked a little bit better here today. Not quite overbought yet, so could see a little bit more swing on this move. And everything does look bullish going into the CPI and FOMC day. Moving over to the Tasty chart, you can see we hit that first upper ATR. That's at 536.52. Hit that level, broke through, closed above it. Next level there is that second one, 538.34. This is the daily chart, but we are continuing to see that volume. But we did see that volume weighted MACD close down a little bit on the last candle of the day on the 4-hour chart. And then looking at that daily, we did see a step towards bullish. So again, mixed signals here. Second ATR, 538.30. So pretty much in that same region. 537.36, so pretty much in that same region. Upper ATR 542.76, which is pretty much in line with that upper trend line that we talked about. So again, everything still looks bullish. We're above all the EMAs and SMAs. MACD showing a little bit more bullishness as we head towards the FOMC. Moving over to the NASDAQ here on the hourly and the daily. Again, 3 bars to close. Closed pretty much on the high. This one looks a little bit better. You can see this is an all-time high close as well as an all-time high here for the NASDAQ. 0.69 to the upside, so it wasn't a super bullish day, but after 4 days of consolidation, it looks much better there going into the FOMC. 474.30, momentum bullish, RSI overbought, but this is a clear breakout, so you have to trade it as a breakout. Moving over to the Tasty charts, same thesis here broke out upper ATR sitting at 470.86. So that's about $2 higher, about 0.5% higher. Obviously, with the next candle, could go a little bit higher from there, 472, 473 in that zone. Again, volume-weighted MACD is starting to step back towards bullish. We've seen these steps before, but that's a little bit better indicator. Still no volume on this. Would have liked to see a little bit more follow-through on that volume. And then looking at the 4-hour chart, second ATR sitting there at 467.90. Upper ATR there at 469.80, so not a ton of upside potential on the 4-hour chart. And you can also see the MACD continuing to show bearishness on that 4-hour, so something to keep in mind, but of course price action is king, and it does look bullish. Moving over to the Russell and the Dow, both of these were negative on the day, 0.62. Momentum still bearish, RSI chopping lower, hit this next level 189.75, finally touched it and then bounced pretty solidly back above the trend line there, back into the middle of the candle. Honestly, that's a pretty good finish based on the price action that we saw early in the session. Had a pretty strong reversal there. Let's look at it on the hourly chart. You can see that big fall, big drop off from the previous close, got all the way down to that level and then rallied straight through back above the 200 level and that trend line there. So looks a lot better. 189.75, clearly important level. Clearly some volume coming in at those levels as well. Not as good as I would have hoped for coming off of that bullish candle yesterday. It's still negative over 0.5%, but it did look okay considering. And then looking at the Dow, 0.34, similar move, big wick low, recovered most of it, still sitting right in that zone, 387.77. Want to see it get back above that and rally. It's basically right there after hours, technically closed above it, but falling a little bit after hours. And if this momentum starts to roll back to bearish, this could accelerate here, and potentially that's a hanging man candle as well. And then 382.20 would be your next level on the Dow. Moving over to stocks that moved here today, we got Oracle jumping massive after hours on their earnings. Their earnings actually missed on the top and bottom lines, but they had very strong guidance. And you can see 9.69%, well above these previous peaks from back here in March. So big move higher on that earnings announcement. And then you got Southwest tanking after a really strong day yesterday. So Monday was up 7%. And then Tuesday was down 5.6%, giving almost all of that move back into this consolidation. They have an activist investor trying to pump up the stock right now, and obviously that was not enough to get some follow through into today's session. Moving over to Apple and Microsoft, these stocks also moved pretty heavily. Apple was by far the biggest gainer in the Mag 7, 7.26% to the upside, massive volume on their announcements yesterday. It was a pretty negative day going into their announcements, and it closed down almost 2%, but then markets realized some of the stuff that was in there, and it is up massive, and it is rallying even more after hours, huge volume, added about $200 billion in market cap. Clearly all-time highs, well above all of these previous highs. Price discovery here for Apple, and it continues to look very strong going into tomorrow's session. And then Microsoft breaking back above my 429.88 level, back above the trend. We're right at these previous highs, so this looks like a new all-time high close for Microsoft. But if it can continue this momentum, potentially we could push into the 450s on Microsoft, so that would be bullish. Momentum's bullish, RSI looks bullish there as well. Moving over to Google and NVIDIA, Google was up 0.88, rallying a little bit more after hours. They're also partnered with Apple a little bit, rallying towards that 179.42 level, which is all-time highs here for Google, way above those previous peak highs. So wanting to see this push above that level, hit the trend up around 180, 181. Momentum swinging to bullish. RSI looks like we just barely broke above it, so I would like to see that hold. And then NVIDIA continues to chop sideways at these resistance areas. Momentum starting to fade here. I think some of the glory of the stock split is starting to wear off, and you might see this come back to earth a little bit. Moving over to Meta and Amazon. Meta continues this run towards that 520 level, still expecting to hit that. Momentum and RSI still look very bullish. Amazon, not as bullish, 0.09s, falling a little bit after hours. Didn't quite touch 180.66. I still think it's going to get there before this starts to sell off majorly, but it really hasn't done it quite yet, so starting to see a little bit of fading on Amazon, whereas Meta still looks very good. Moving over to Staples and discretionaries. Staples was down 0.05, still holding the level, 77.5. As long as that holds, we're still okay, but it's definitely looking weak. We did have a new low on that wick here today, and then we caught a bounce back up above that level. And then discretionary is negative on the day as well, 0.25%. Still cannot get above that intermediate resistance point here, down 0.26. Momentum starting to fade, so that looks significantly weaker here today than it did yesterday. Moving over to oil and gas and technology, oil and gas caught a bid 0.32 right at the 21 EMA, so critical zone here. Want to see it get above that, still below that 55. Last time we were here, we sold off pretty majorly, but we hit the 200, caught a nice bid, momentum flipping to bullish, RSI looks okay. I think oil and gas could be on a little bit of a run. It's back above this trend line here. We did that before, so not super convincing. Still want to see this get back into that 55 EMA at 152.73. And then technology, obviously a massive day, 1.86%, headed towards that trend line up around the 225 area in my opinion. Moving over to oil and copper, oil was positive as you would expect. We're back above the 21 here, the 144 VWAP and the 9 EMAs, so that looks a little bit more bullish than the oil and gas stocks. Again, you can see a very similar structure though, consolidation, dip low, caught a bounce from 73 back into the range. Want to see this break higher just like we're looking for on the stocks. And then copper still grinding along that trend line in the 55 EMA. Would like to see this push at least to that 21 there at 4.76. Moving over to RIOT and Marathon Digital. These continue to hang in there quite well, honestly. 0.96 and 1.9 on the days, respectively. Continuing to throw wicks to these lows and catch a bid. Looks like this consolidation might break to that 200 there at 1166. Momentum slightly bullish, RSI slightly bullish. And then look at this on Marathon. Huge wick. The low of day was all the way down at 17.6. And then we ended up flipping to a positive day, closing well above my 18.78 area. Momentum, not bullish quite yet, but that's a pretty big reversal on the day. Over 2% down and then back to almost 2% positive on the day. Still want to see it get above this trend line and start to get into this zone up around the 22 area, but that's something to pay attention to. Could see a second day rally off a candle like that. Moving over to 20 and 50 day breadth, you can see bearish breadth on both of these. Again, markets are continuing to all-time highs, Apple driving it there, but breadth continues to fade, which is concerning. Actually saw a step towards bearish there on the MACD on the 50 day breadth. RSI on both of these breaking back down. You can see it back below the SMA, not great there. And then similarly here, 20 day, just barely below that SMA. So not super great on breadth, not confirming the rally right now. Moving over to the dollar, we did continue to see that dollar strength. Still have not hit my 105.5 level. Momentum bullish, RSI bullish on the daily chart. Think we're going to get above that and start to push. We'll see how it plays out. 106.8 would be my next level. Again, continuing to get rejections in that zone, but overall still looks bullish on the daily chart. Moving over to the 2-year and the 10-year yield, both of these sold off pretty aggressively going into the FOMC, 0.88 and 1.45, especially on that auction. 10-year sold off quite a bit. Headed back towards the 200 there at 4.357. My level there, 4.35, right in that same zone. Probably going to find some support there. Obviously, the FOMC is going to dictate this price as well as CPI, but it does seem like we might have rolled over just a little bit. And if that's any kind of forecast, maybe we see yields dip low and markets rally on that move. Moving over to bonds, you can see J&K rallying 0.17, TLT 1.03%, makes sense with yield selling off. Again, FOMC is going to determine, but this looks a lot better now here on TLT. So we rallied up, we had a high, dipped low, higher low from this previous, then we got a higher high. And if this continues to rally from here, that's going to be a higher low as well. And we might see this kind of consolidation and grind up to that 96.50 area. That could be a bit of a change of trend, starting to get that short-term trend structure to the bullish side on bonds. And if that's any indicator, we should see yields going lower, which should be bullish for markets overall. Moving over to volatility, MOVE index perking up a little bit ahead of the FOMC. And then the VIX through a wick high, slightly positive, 0.86 on the day, still holding my level, 12.75. Momentum slightly bullish, RSI slightly bullish. So it's grinding a little bit higher, kind of a cup starting to form there. Nothing crazy, but it does seem like we might get a little bit of a pop towards that 14 area. Moving over to my accounts, I made a little bit of money. Main account doing fine with the NASDAQ going higher. Should have made more money there, to be honest. But overall, not bad. You can see I rolled out on my covered call, 465 for $3.50. We're basically at max profit there. That puts me at $468.50. So that $2.50 should come in. Obviously, there's a lot of room for movement with the FOMC and CPI. So IV rank is pretty high. And then looking at the puts, rolled up here to 466. That's already at $1 profit. So see how that plays. There's another $3 worth of profit potential there. I also took off that second set of calls as we continued to rally, so managed to make a little bit of money in that main account. And then the IWM obviously got chopped up a little bit there. I decided to put on some shares. We'll see how that plays for tomorrow's session. I have some shares. I have a covered call at 201 for $1.74, almost a 1% potential move for the FOMC. Overall, it looked really good over the course of the day. We saw the dip low. We saw the rally through. It's basically flat after hours. I think if we can get a little bit of a rally here on the IWM on a follow-through style move, that could be quite bullish, and I wanted to play that move. So a little bit more bullish on the IWM today than I was yesterday, and then basically the same position on the Qs, slightly bullish. Let me know down in the comment section what you think CPI and the FOMC is going to do to markets. Are they going to drive us higher, or is this the turning point to the downside? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.